mixed inflation data, the debt ceiling, and how the rise of artificial intelligence contributed to a historical event in the stock market. We're covering all of this here on our Markets at a Glance update for May. I'm John Strieter, Impact Investment Analyst at Wespath. Thank you for tuning in. We'll start with the debt ceiling debate, which reached its conclusion at the end of May. After weeks of negotiation, President Joe Biden and House Speaker Kevin McCarthy reached a tentative deal on May 27th to suspend the debt ceiling until 2025. The agreement also included other spending provisions, such as a cap on government spending. Congress eventually passed the so-called Fiscal Responsibility Act and sent it to President Biden for his signature on June 1st, just days before the estimated June 5th deadline to avert a U.S. government default. Meanwhile, U.S. inflation data was mixed in May. The pace of inflation, as measured by the Consumer Price Index, declined slightly. But the Federal Reserve's preferred measure of inflation, the Core Personal Consumption Expenditures Price Index, was marginally higher. Still, there was plenty of optimism in the stock market, at least in certain sectors. The NASDAQ Composite Index, which includes a heavy weighting to technology stocks, increased 5.9% in May. One of the NASDAQ's strongest performers was NVIDIA, a company that makes computer chips. NVIDIA is a leader in the artificial intelligence market and witnessed remarkable performance this year amid the growth of popularity of AI. In May, NVIDIA eclipsed a $1 trillion market cap, making it just the 7th publicly traded company to reach that valuation. Leaders like NVIDIA have helped push the NASDAQ up more than 24% so far this year. Let's take a closer look at the index's strong 2023 performance in our chart of the month. Here, we are looking at the NASDAQ alongside the Dow Jones Industrial Average, another popular U.S. stock market index. Compared to the NASDAQ, the Dow is weighted less heavily to technology companies. The Dow is almost flat on the year, creating the largest gap between the two indexes since the NASDAQ launched in 1971. To read more about this news and to see how it affected our fund performance for May, check out our monthly investment report.